If you're buying your first rental property, a duplex may be the smartest decision that you'll ever make. And so we're going to walk you through the pros and cons of buying single family houses versus a duplex or a small multi unit property, especially as you're growing as an investor. So, just starting out, if you're looking to buy your first asset, it's a good thing to consider whether a house or duplex could make the most sense. With a multifamily property, some of the economies of scale that you'll get, which is why a lot of these institutions will build, 50, 100, 300 units in one location, is if you had to compare having two houses compared to, one asset, one roof, two tenants in one side of one property, from a management perspective, it's a lot easier, right? You have one location versus two. Your property manager is able to make things more efficient when it comes to maintenance and things like that. So, in this video, we're mostly going to discuss just having one house versus a duplex. So, obviously, with a house, if a tenant doesn't pay, you're not getting any rent. With a duplex, you have two units that are paying rent, could be varying amounts. And depending on the location, even if you wanted to try short term rental in one of the units, you could. But most of our clients obviously are just doing long term rentals. So, you have two tenants paying rent. So even if one goes vacant, you still have something that's covering the debt service. If you're a newer investor or just moving into a newer market or you haven't bought, a lot of primary residences before, another thing we see is a move-in investor. So just last year we had a duplex, a two-story duplex in Tampa where the homeowner or the buyer basically bought the duplex. He's living in the top unit and renting out the bottom. That's an amazing strategy, often overlooked. You could sort of replicate the similar model just by renting out the rooms. So if you had a house and you wanted to rent out some of the rooms friends that you weren't occupying, you could do that as well, right? But duplexes, small multifamily, from our perspective, that's what we see most investors buying to hold as long-term rentals. Now, you may by default move over time and keep some of your houses as rentals. So we're not saying that buying single family for a rental standpoint is, a bad idea. We typically just see more investors focused on multifamily properties because if you have 10 units, a couple go vacant, or you have a couple vacancies that you're marketing for rent, you just have to go to one location to show all the units, right? So it makes management a little bit easier. You're only dealing with one insurance policy instead of, 10 houses equivalent. It just makes things a lot simpler. And it's an easier thing to scale maintenance as well. So your maintenance costs, in theory, could potentially be lower if a lot of the units are the sort of same mix of beds and baths, square footage. You're able to just renovate and just do things a lot quicker and more efficient. Having said that, though, with multifamily properties, if you have studios or one bedrooms or two bedrooms, those typically are going to have a little bit more turnover over time than you might a house, right? So if you have a 3-bed, 2-bath house or a 4-2, those tenants are probably going to stay there a little bit longer. So that's something you do want to consider if you're looking at multifamily properties is the unit mix. And just knowing that either smaller units based on square footage or the amount of bedrooms, basically the lower the amount of bedrooms, potentially over time, you could have a little bit more vacancy. So you're going to have probably stronger cash flow on the multifamily properties. You will want to probably include lawn care, quarterly pest control, something like that, which would be a little bit more unusual on the single family to include that, but it's benefits for the residents there, right? So even with that, duplexes, small multifamily properties, you do also want to consider the water bill situation. So multi-unit property, everybody should have their own electric. But when it comes to water meters, you might have a 20-unit apartment complex that's on one water meter. So it's really nice to be able to buy a property and have it separated. But most of the time, when you're buying it, you're just getting whatever is there. So one water meter for 2 units, you technically could be including the water. We always recommend either a flat fee per unit, or there's companies out there where you can monitor the exact usage and pay a monitoring fee and bill the tenant back 100%. So that way, if there's more use than usual or there's a leak, it's not always falling on you as the owner. So some minor kind of differences. And buying a duplex is quite different from buying a house with a mother-in-law suite. There's a lot more potential complexities with that. So if that's something that you're interested in, some of the same dynamics would apply, but there can be some other nuances with that as well. So we talked about CapEx, repairs, maintenance, one roof, that sort of thing. Scaling in one location is a lot easier to buy just more in one location than 10 houses sort of all over the place. And as the market shifts around, there's always investor demand for multi-unit properties, whereas houses, potentially maybe you have more appreciation, just based on the market dynamics. But the benefit of multifamily is you can come in, I mean, similar to a house, right? But you can come in and the better you optimize the cash flow of the multifamily asset, the better you can push the value. So whereas a house is more used as a sales comparison approach as far as value, if you have rents that are not good, it's going to be near impossible to sell that house until it goes vacant. Whereas multi-unit, it doesn't matter as much. That could be seen as a value add for the new buyer, where if rents aren't market, hey, that's value that the new buyer gets to create. So you can force appreciation or the value of your property on a multi-unit a lot easier. Just obviously based on repairs, updates you can make, increasing the rents, optimizing the cash flow, meaning cover, the expense side of it, whether it's insurance or maintenance, different things you can do because that's going to help you push the value of the property. And depending on the market dynamics of interest rates and cap rates and what investors are willing to pay, if it's a more competitive market, that could also increase the value of multifamily assets. So with that, of course, multi-unit stuff, you have a little bit more potential management things just to sort of deal with. You have more people living in a smaller space. You could have shared walls. You might have to have tighter restrictions on community rules and stuff like that, where a house, is sort of just there, right? So shared spaces, obviously, depending on the size of the multifamily property, you could have small amenities. But typically for discussions today, we're kind of talking about your very simple duplex. There's no amenities or anything like that, but you just have shared spaces. Maintenance can also be a thing, right? If you're doing plumbing work, you may have to interrupt both tenants if they're on the same water meter. If there's a leak somewhere on the roof, you might be having an impact on two residents versus one. So the benefits of multifamily outweigh, in my opinion, the risks or some of these little nuanced things that you can kind of deal with by having more, multiple tenants in one area. And your exit strategy could be maybe a little bit different with multifamily. Like I mentioned before, your strategy could be different. You could be doing long-term rentals. You could be doing medium-term stays that are furnished. You could be doing Airbnb. So if you have a duplex or small, up to 4 units is still considered residential in a great location, your strategy could pivot depending on what the market demands. And so you might have some more flexibility on what you're able to do with the property and how to possibly increase the cash flow and the value as well. And so it's just something that we wanted to kind of talk through with you guys. If we're looking for something where we love multifamily or even like a room rental kind of thing, but like I said, houses are still a good option if that's the price point that you need to get it in, or you have other use cases for the properties. And if you have a house that you're living in, or with any property, you always want to just be evaluating the opportunity cost of keeping that rental property. So you need to be constantly analyzing the performance, right? If you could just put your money in a bank for 5% and your rental's making 7, but you have the risk of vacancy, you have the risk of the tenant not paying rent, like maybe you should just sell that asset and cash out on the equity, or do that and move that equity, that capital into a new project. Um, you could do that through a 1031 and you defer some taxes, but you need to constantly be evaluating. If your interest rates are really low or you just bought the house a long time ago, I'm not saying that you need to sell the house to be able to buy a duplex at today's prices and today's interest rates, but just from a new, fresh perspective, um, buying a house is really no different than a small multi-unit property. And in our opinion, we'd rather spend that money in a multi-unit area or property in a better area as well. So whether it's a house or duplex, we always recommend, if you can, staying out of the lower income areas over time is where we see a lot more of the management headaches. Obviously, people, their affordability is different, where we see more people fall behind, more evictions and stuff like that. So spend a good price as much as you can to get a good asset in a good area, whether it's a house or a duplex, and your strategy can always change. So if you buy a house and you want to sell it at some point and trade up, you can. So just the most important thing being get educated, get started, understand a little bit of the nuances between single family and multi-unit properties, because there are loans that you can get for packages of houses, but it's just a simpler strategy usually from an investor standpoint to be in the multifamily game. So just a quick tidbit too on like townhouses and condos. It's extremely rare that we've ever had an owner actively looking for condos or townhouses. Mostly the condo thing is related to condo fees always going up and a little bit more harder to control. You may also run into a challenge finding management companies to be the right fit for some of the different assets. So most of our investors that are buying rental properties for investment purposes are looking for multifamily rather than condos, townhouses, or single family homes. So hopefully this was helpful. If you ever need help underwriting a deal or just talking through scenarios, you're interested in making offers or you're making offers with real estate agents, you just want a second opinion on the due diligence, we'd be happy to share our resources and checklists that we go through to make sure you're underwriting a deal properly and you don't buy a bad property, and make sure all the mechanics work out and potentially find revenue that the seller doesn't know about. Better, things that we can improve on the lease, different things on the property that we may be able to do to generate more income for you as the owner that you typically miss out on with single family houses. Thanks for watching.